My internet can go die in a hole. If an analyst wants to examine a company's current ability to generate income, the current ability to generate income is profitability. If an analyst wants to assess the long-run survival, it's solvency. If it's liquidity, it's current ratio D. Oh no. The number of days to sell inventory. Alright, so the things to memorize here. I wish I could have a cheat sheet. I should ask him about that. Like, can I have a piece of paper that has all of the ratios on it, or do I have to have them memorized? Because, kind of. Can I just do it? Can I just remember how to do it? Average inventory. Is it sales revenue? I thought it was net income divided by... Or is it cost of goods sold divided by... I can't remember, dude. This sucks. This really sucks. Wait. Nice. I don't know where it is. Oh. Cost of goods sold divided by average inventory, and then 365 divided by that. Oh my gosh. Oh my gosh. All right. 400 divided by 138, and then you do that 365 divided by 8.3, and you get 43.9. So that's how you get it. Now, what are the earnings per share? Earnings per share? Oh, no. No. How do I not have that here? Net income minus preferred dividends divided by average number of common shares outstanding. Net income. Wait. Preferred dividends. What does that mean? Preferred dividends. Net income. I'm guessing it's just the amount of money. Net income 95,360 minus 8,000 divided by average number of common shares outstanding. 429,600. I got 0.20. Oh, well, why is it 0.21? It should be 0.20. Did they not round? I don't get it. I got 0.220. They got 0.21. But I'm pretty sure I still did it correctly. I don't see how this is incorrect. Like, how could I have... Whatever. Alright, well, that's the entire thing. What? Alright, well, I went through this quiz, I think. Yeah, I went through the quiz, okay. And then the next quiz that he did was, weirdly enough, the exact same thing. It was the exact same quiz. Wait, what? Yeah, this is the same quiz. This is the same thing. I don't know why he did it like that, but... Here's this one. I actually got one question wrong. Manufacturing overhead was estimated to be $400,000 for the year. Blah, 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 blah. What is the predetermined manufacturing overhead rate? Oh, this is easy. This is easy. Wait, this is from Chapter 2. Okay, the predetermined manufacturing overhead rate is 400,000 divided by 20,000, which is 20. Yes. Now, what is the amount of manufacturing overhead applied to production? So 200,000 divided by that, and then you do 10 times the amount of labor hours, which is 210,000. This I got wrong. Cost of goods manufactured. So you do 35 times 5,000, and then wait, what's going on here? What's going on here? What's going on? What's going on? That's the overhead. Okay. So this. Wait a minute, no. Do you need to use a predetermined rate? Yeah, I think you do. So you do 110 plus 150 plus 175, and then you subtract 17,000 because it's not finished. And you have 418,000. The correct answer, D. Yeah. Okay. Wait, I don't know how I ended up with 426. I think I didn't take into account the 35 times the other thing. Okay. Now, which manufacturing... Alright, so 200,000 divided by that times 215 2,150,000. Wait, I think I did something wrong here. Nope. Yeah, I did it wrong. 10 times 21, we got 210, and the actual was 215. It's underapplied by 5,000. B underapplied by 5,000. 5. Cost of goods manufactured is the amount of cost transferred. D, out of work in process and into finished goods. I keep sniffing really close to the computer, so yeah. When disposed of, if you have overapplied manufacturing overhead, you overestimated the amount that it would cost. So when you dispose of it, cost of goods will actually go down. Yeah. Okay. Done with that. I don't think studying quizzes is going to be enough to do well in the test. But I don't know. I might have time to do more stuff. I don't know if this is like a bad thing to admit to, but I think I'm gonna try studying during my corporate finance class. I'll have the class open in the background in case there's information I need, like about like when we need to do stuff or whatever. But because I don't want to miss another lecture. But on the other hand, I need to study for my test. And this was an epic quiz that took 5 years to do. I don't know if I want to do it though. I remember how to do all that stuff, so I don't want to do it again. Let's just go over the conceptual questions. Fine, I'll go through it. Jeez. What is the activity rate for inspection? You do the cost. 90,000 divided by 60. Yeah. What is the total cost of inspection? Come on. You 750 times 60, 45,000. Okay. Standard is 0.3 times 500. So 150,000. Nope. You've got to be joking. Oh. Wait, so it's, and then it's 0.7 times 30,000. And then add them together. And 171. Gross profit for one chainsaw. So first figure out the cost and then this is a complicated question. It takes 5 years to do. So you do 2 times 1,000, and then you do 20 times 40. So you have 2800. And then you do 10 times 200 and 3 times 200. And then you have 2,800 plus 2,000 plus 600. And that's the cost. And then divide by 200. And it's 27. 58 minus 27 is 31. Okay. Yeah, that took forever. That's a complicated question. What's the total manufacturing cost for one teddy bear? So 15,000 for sewing. So 15,000. Wait, what? Direct labor hours? What are you talking about? What? It's allocated on the basis of direct labor hours. Oh. Okay. 0.5 times. Nope. 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 Wait, what? No. We need to do... The direct labor is 0.5 times 2,000, and then it's half of that is 50 cents of direct labor, so it's that much money for direct labor. Oh, come on, wait. No, hold on a second. I'm dumb. You just do 0.5 times 15,000. And then you do 0.35 times 10,000. And you get 7,500 plus 3,500. And that's the overhead cost. And then 2 times 2,000 and 0.5 times 2,000 and 11,000 plus 4,000 plus 1,000 and then divided by 2,000 and you get the cost of making a teddy bear, which is $8. Why is it so complicated? Oh my gosh. And that's only question 5. Now we're on this question. I think these are conceptual questions. I somehow got this right. Oh man, this is gonna suck. I need to study the facility level, service level, group level, and customer level things. Because I don't know how that works. I just kind of guessed based on my intuition. Okay, so development of Zumba is considered a what activity? So Sally is currently learning Zumba and plans to offer a Zumba class in the group training room on Wednesday. So the development of Zumba. Do they mean just the whole thing related to Zumba? And I said it's a service level activity because she's providing a service to people, right? Of teaching them the class. I don't even remember what group level is. I'm pretty sure it's not customer level because it's not like on an individual level, and it's not facility level. I don't know what group level exactly is. I'll have to look it up. I'll just have to look up the definitions. Internal failure costs are costs that result. So yeah, this one was somewhat intuitive as well. They are defects that are caught before the product is shipped to the customer. Yeah, okay, I get that one. So what we need to do is study the group level, facility level, service level, and customer level. We need to study what are internal failure, what are preventative costs, and what all the other categories are. This is from chapter 4. Maybe what I should do is do that one activity thingy for chapter 4. Maybe. The cost of quality training. Is an example of what type of quality cost. So you're training people to have good quality, and it's a prevention cost. Yeah. Now, what is the target cost? Okay, so this one was so fun, dude. Oh man, this one was... Okay, what was I doing for this one? I think... we want it to be 20%. We want it to be 1.2 times 25, right? That's what I did before. No. 1.2 times something. We do 25 divided by 1.2. I remember doing this before, and I was getting the wrong answers. But I can't remember what I did to get the right answer last time. I have to scroll up. It may have been too long ago for me to actually find it on my calculator, though. The answer was 20 flat. Yeah, it's too far up in my calculator. I can't find it. Oh no, I think my earphones are dying. Oh no. Maybe? No, maybe not. It's not 25 divided by 1.2, so... How is it not? I don't understand how it can't possibly be, how it's not 25 divided by 1.2. I don't understand. Because 1.2 times 20 is 24. 20%. It's not 20% of the amount of money. It's 20. It's a 1.2 times x. No, 1.2 times 25. No, it's... If it's a 20% return. Is it 20% of 5? Of 25? 0.2 times 25 is 5, so it's 5%, or $5 of profit. That's literally all you do for this question. You just do 0.2 times 25, and then 25 minus 5. Okay, yeah. So anyways, I studied all the quizzes, I think. But we didn't have a quiz on Chapter 5, unfortunately. Maybe what I should do is study that. But I don't think I have time to do those activity thingies, because it takes so long to do. But it's just the easiest way to study for me. But it's too time consuming. Can I like rush through it really quickly or something? Also, maybe what I should do is study these things. But man, so much stuff to memorize. It's too much stuff. I did SB 13 already. And that's how I studied chapter 13. But I didn't do that for any of the other chapters. Ooh. I wonder if we need to know anything from chapter 1. I'm gonna prioritize chapter 5. I think I'm gonna prioritize that because that's the one I studied the least so far. Why does it say recharge? This could take too long. This method of studying could take too long. I think my internet might be not working right now. Let's see. Oh, it worked. Never mind. It says it could take an hour. Let's see if I rush through, will it work? Behavior? Yep. The level of activity over which cost behavior. I don't remember. It's relevant range. Okay. The level of activity over which cost behavior assumptions are true is known as the relevant range. Okay, I would not have known that. Okay, this is something we're going to need to memorize. Which one changes in total in direct proportion to changes in activity level? Variable. The key to most managerial decision is understanding. True? Yeah. Fixed costs. I don't know. Okay, so the right answer is it needs to be all of them except for this one. So fixed costs should not be expressed on a per unit basis when making decisions. The fixed cost per unit becomes progressively smaller as the level of activity increases. Fixed costs generally include rent and supervisors' salaries, remain constant in total within the relevant range of activity. I don't know. A cost that's easy to change in the short run is called a discretionary fixed cost. Relevant. Variable costs. Constant per unit, vary in total. Step fixed costs. Don't know. Committed fixed cost. There's discretionary and committed. Which of the following statements are true? Not sure. All right. So this is true. The relevant range of activity is approximated by a straight line. Oh yeah, I didn't really look at that stuff. The relevant range of activity. Like there's a graph. You can look at it graphically too, the questions about this stuff. These two things are not true. Yeah, this is the only one that's true. This is what they said. Oh no, these two are true. I'm stupid. These three statements are true. This one is not. Okay, so within the relevant range of activity, variable costs remain constant per unit and change in total. Okay, so the relevant range of activity is approximated by a straight line. Outside of the relevant range, cost behavior conclusions may not be valid. Within the relevant range, fixed costs remain constant in total. Okay. Can I go to the next question? Oh, they're making me read about it. Nice. That's funny. That's very funny. Fixed costs could not be expressed on a per unit basis. You know what would be hilarious if none of the quiz questions were from chapter 5. Or I mean test questions. That would be so funny. Because he's only having us do a small portion of the test today. Fixed costs should not be expressed on a per unit basis. You know what? I think I want to go back and see what he said about that again, because I want to see like which things I need to study. That's something I'm kind of worried about right now. Like, which things do I need to study right now? Let's go. Come on. My internet's probably being dumb again. Did I ever upload those videos from before? I think I did. I was a little worried there for a second that all my stuff had gotten deleted. Hello?
So we'll discuss the exam. Exam will be, respondents will be required. So you will turn on the respondents. It will be mostly multiple choice questions from chapter 13. That was about ratio analysis, financial statements. That was bridging the gap between financial accounting and management accounting. And after that, we moved to chapter 1, cost accounting studied. So chapter 1, chapter 2, chapter 4, and 5. Easy quiz, easy exam, not many chapters. 5, as you will notice, is very easy. 4 and 5, 2 and 4 are kind of the same. One is introduction, so they are that you might not have heard before, like contribution margin, income statement, and all that. We are going to cover that today. And you will first log to this Zoom and then go to the exam.
Okay. How's that going to work with a Respondus browser?
Yeah. Actually, go to the Respondus directly, and from Respondus, I can see you taking the exam. We'll keep an eye. How does it go? Meaning, I closely watch and adjust for sure. But I'm certain those 3 students are going to get an A for sure. And I'm going to share a file with you that I shared a long time ago. Remember the income statement format? Net sales for 20 points. Remaining 60 points will be choice from chapter 13, from chapter 1, 2, 1. So the exam on, basically I'm dividing this exam because I'm not 100% sure you are 100% ready. So this will be some questions from each chapter. That will be sample exam for 20 points. Remaining 60 points will be once you come back. So you have some idea, and that way I'll give you the exam towards the end. I still need to cover chapter 5 at least, and I'm not sure how much practice. I have covered everything from chapter 5. I just not feel comfortable. You guys are ready yet for chapter 15. Chapter 5 at least, and I'm not sure how much practice you still need. So basically, the plan is I will continue with chapter 5 on Thursday, and the second part once you come back.
Thursday, right?
Yeah.
Yeah, we have like a pause.
Yeah, that's furlough. Actually, I'm not have some surprises. That's why. I know you can do it, but we'll spend a little bit more, give you overall view of different ratios, and then you'll take it. Hopefully, you'll get good points. You'll get.
Yeah, it wasn't really clear what. I think it kind of sounded like all of the stuff was still from every chapter. So, just keep going, starting chapter 5's smart book thingy. Okay. Fixed costs should not be expressed on a per unit basis. I don't know which one is right. Oh, it was that one. Okay, they should not, because it may make managers believe they can reduce costs by producing more. Yeah, that makes sense. That makes sense. Mixed costs. Step costs. I'm not sure. Just gonna select that one. So this one and this one. That's funny. That's funny. I selected the only wrong answer. Okay. So step costs can be either step fixed or step variable, and are fixed. They are fixed over some range of activity. Wait, I'm stupid. That's so obvious. This one is obvious. They are not always treated like variable costs. It depends. It depends. So it's this and this are correct. Fixed costs per unit. This. Wait, these are all correct. There's one that's incorrect. I don't know which one it is though. Whatever, I don't care. Which one is incorrect? This one? Wait, I'm stupid. That's not right. Okay, I get. I'm stupid. I don't know why I'm stupid. A fixed cost that is relatively easy. Okay, discretionary. Okay. Relevant. Range. Why is it important to analyze mixed costs? I don't know. Okay, so the correct answers is this one, this one. This one and this one are correct. These two are not. So the correct answers here are that why is it important? Managers need to know how much of a cost is variable and how much is fixed. To make decisions, managers need to know how costs change. Which one is true? I don't know. Okay, so this one is true, and also this one and this one. So this one is not true. Mixed costs are... Nope. They're not known as step. They're known as semi-variable costs. Mixed costs contain both fixed and variable. Both the total cost and the per unit cost of mixed costs change, and the equation for a straight line can be used to express the relationship between mixed costs and level of activity. Awesome. Step fixed costs. I remember that one already. The linearity assumption states. I don't know what it is. I don't know what the linearity assumption is. So this is the right answer right here. So the linearity assumption states that a straight line approximates the relationship between cost and activity. A fixed cost remains fixed. In total. Oh crap, I don't know what this... Yeah, I didn't read too much about how you represent the equations. Don't know. So it's actually this one and this one. So the B, I know that in algebra, the B is... So bx plus a, b... So B is the slope of the line. So, oh yeah, that's one of the answers. Yeah, B is the slope of the line, and it also represents the variable cost per unit of activity, whatever. All right, a fixed cost. See, this is going to take too long. But I mean, it does get me to learn the info. So, I totally forgot what this is. There's discretionary, and I forgot. It's actually committed. Committed fixed cost. Committed. Okay. I don't know. So the answer is a relevance range analysis. So basically, they use least squares regression, high-low method, and scatter graph plots, but they do not use relevant range analysis. Yeah, this is how you learn information without reading the textbook. Semi-variable. A useful first step in analyzing cost behavior is to prepare. I don't know. Income statement? I don't know. Nope, a scatter graph or scatter plot. Scatter graph or scatter plot. Okay. Linearity? Linearity. Nice. Okay, so Y is... I think it's the total cost, right? Nice. This is not the question I need to answer. I need to answer the one about committed costs. Committed fixed costs. The two most extreme activity observations, maybe it's the high-low method, because that seems intuitively correct. All right. Scatter graph. Nice. Nice. Voice graph. So B is the slope of the line, and it's the variable cost per unit of activity. Don't know. They use a scatter graph. Again, are you kidding me? I don't know the answer. It's actually false. Visual fit is an inexact estimate. So visual fit is an inexact estimate. Okay. I don't know. Okay, activity. Then choose activity. So use activity for the high-low method if they do not match or whatever. Least squares. Least squares. I forgot something. It's actually least squares regression. Least squares regression. Which of the following statements are true? This one, cost is plotted on this. No. Yes. Nice. Least. Nope. Okay, what is it then? What is it? I don't know. Is it the high? No, it's not high-low. It's one of the visual fit. Oh, visual fit. It says drawing a line through the scatter graphs data to provide an estimate is called visual fit. Okay. So it doesn't use the highest and lowest level of cost. It uses the highest and lowest level of activity, not cost. And it does use only 2 data points. Nice. Least squares regression. I don't know. It is true. We didn't talk about this at all, did we? Maybe he did talk about it in class. Maybe he did, because I missed 2 classes, so it's possible that they did talk about it. I don't know how to do these questions. I don't know how to do them. So because we didn't do this in our homework assignments. This was not part of our homework. So I got the right answer. That's funny. So anyways, you do the total cost minus. So you have the cost per unit of activity. So you do the cost per unit of activity times the units, and you get. So the variable cost, you calculate the variable cost, and then. So you have the total cost, and you subtract the variable cost to get the fixed cost. And then you do the fixed cost plus the number of units at the low level times the thing. So the variable cost at the low level of activity. So you do the fixed cost plus the variable cost at the low level, and you get 3,200. Okay, I get it. I think. So first calculate fixed costs, then do fixed costs plus variable costs at low level. Visual fit method provides nope. High-low method. I don't know. I feel like this is easy. Maybe? Just guessing here. So it's easy, but it may produce inaccurate results. Nice job. So the difference in cost divided by the difference in activity. What is that? We didn't do any division in that question. What the heck? Oh my gosh, I was right. What the heck? You must calculate the variable cost per unit first, before calculating the fixed cost. Now, so $12.50. Stop. Oh my gosh. The answer is R square. What is that? I don't even know what that is. What is R square? Okay. Oh yeah, this one. So the contribution income statement is sales minus variable expenses is equal to the contribution margin minus fixed expenses equals net income. Wait. So sales minus variable equals contribution. Contribution minus fixed is equal to There you go. Okay. We're using high-low. Fixed costs are calculated. What? 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 Wait, I'm an idiot. I put the exact opposite of what I was thinking. I put the opposite of what I was thinking. I'm so dumb. I don't know what this is. I'm going to select all of them so that it's easier. Okay, so the correct one to select is this one and this one. R square measures goodness of fit. R square is usually provided by least squares regression software. Squares regression line. The vertical intercept of the line is the total something cost. Fixed costs, or I would assume fixed. Yep, it is fixed. The vertical intercept A of the line represents the total fixed cost. Contribution margin is sales revenue minus variable costs. Limitation of something. I would assume this one. No, least squares regression. No, scatter graphs is the answer. Never mind. A limitation of scatter graphs is that they are subjective and inexact. Okay, so yeah, scatter graphs. Not sure which is the right one. So a contribution margin income statement separates costs into their fixed and variable components and can assist with management decision making. Using the high-low method, the fixed cost is calculated after variable costs. Okay. I don't know. It's actually contribution margin. So after fixed costs have been covered, contribution margin becomes net operating income. Oh, wow. How much of the variability of y is explained by x is r squared? Sales revenue minus variable costs is equal to contribution margin. Okay. How do you do this question? I just want to see how they do it to make. Okay, so the answer, how do they do it? So first they calculate the contribution margin, which is they make $10 and then the variable cost is 4, so the contribution margin is 6, and then the number of units times the new amount would be they make $9,000. So when they make $9,000, that's the amount of money. Wait, what? So they will make. Oh, so if sales now they don't increase to 1,500, they increase by 1,500. So you just add. So you just do 1,500 times the contribution margin. What? So what you need to do is the contribution margin. So, times the amount changed, and that's how much your profits will increase. I see. What's a ratio? What's the contribution margin ratio? I don't know what that is. Okay, 45. Well, what? 45%? It's probably really simple because they're not explaining it. Or maybe they're just looking for the contribution margin. No, I don't think so. It's probably the contribution margin divided by something, or something divided by a contribution margin. So anyways, oh my gosh. So 20 minus 11 is equal to 9. 9 times 8,000. 72,000. Wait, what? That doesn't make sense. Oh wait, I'm stupid. Okay, 11 times 8,000 is that, and the fixed costs are 35,000. The contribution margin. Okay, 35 divided by 8,000. The contribution margin is that. Or no, that's the fixed costs. I already found that the contribution margin is 9. Wait, this divided by 9. Nope. How do they get this number? They don't explain it. They don't explain this. Is it the contribution margin divided by the total costs? Okay, maybe that's what it is. So anyways, the contribution margin is... Alright, so 20 minus 11, the contribution margin is 9 per unit. 9 per unit. The contribution margin is 9 per unit. And if the total cost is 20... Oh, no, I'm stupid. Okay, what's the cost per unit? Okay, or what's the total cost per unit? Okay, so 11 times 8,000. So 88,000 plus 35,000 divided by 8,000. The cost per unit is that. The contribution margin is 9. 9 divided by this is that. No. I don't know what a contribution margin ratio is, so we have to look it up. It's the unit contribution margin divided by the unit sales price. Okay, that's very good to know. So the unit contribution margin is 9, the unit sales price is 20. So the answer is 45%. There we go. Finally. This is a lot of information that I don't know about before taking a test over this material. I wonder how many quiz questions is going to be relevant to this stuff. I hope this is actually a good idea to do this. Is it like this? I don't know how to do that one. All right. How much will net income increase? Wait. The answer is 2,500. Okay, so you do this amount of sales times the contribution margin. So ratio, and that equals the contribution margin. And then you subtract this amount and you get that much. Okay. I don't know. Fixed costs. Contribution margin first goes to cover fixed costs. I don't really know what that statement means. Contribution margin first goes to cover fixed costs. I don't really know exactly what they mean by that. It says it goes first to cover fixed costs. Okay. The R square measures goodness of fit, and that. Whoop. R squared is the measure between 0 and 100%. R squared indicates the variation in the dependent variable cost that is explained by the independent variable. Okay. Non-manufacturing costs are... Oh, come on. It's never reported as inventory. Okay, whatever. The unit contribution margin. Oh yeah, I'm an idiot. I'm stupid. Alright, the unit's contribution margin. I don't know what a unit contribution margin is. Oh wait, I'm stupid. I know what it is. I think it's this one. Okay, so the unit contribution margin tells how much each additional unit contributes to profit. Yeah, okay. How much contribution margin is generated by every dollar of sales is shown by that. Baker's contribution margin. By the way, how long have I been doing this? An hour. Oh, yes. Hmm. This is dumb. They don't even tell you which part to read. Nice. Alright, so 10 minus 4, 6 times 1500. Wait. No. 6 times... $9,000. Yeah, a bunch of information they gave you was completely irrelevant. No, you moronic purse. It's very simple. You just do 20 minus 11, and then that result divided by 20. That's it. That's so simple when you know how to do it. Okay, fixed manufacturing overhead is treated as part of the per unit product. I'd say that's absorption. It's treated as a period cost and expense in full. Oh no. Oh, come on. It was exactly the opposite. Absorption costing fixed manufacturing overhead is treated as part of the per unit product cost and expenses units are sold. Fixed and invariable fixed manufacturing overhead is treated as a period cost and expense in full each period. Are you serious? $2,500. What? It only occurs in manufacturing companies. This only occurs in manufacturing companies. And it's due to inventory changes, so service companies are not affected. I remember this question. I can't remember the answer, though. Fixed cost. Oh. Okay. I don't know. It's highest when the units produced exceeds units sold. I don't get this question. Net income is highest when units produced exceeds units sold. If units produced exceeds units sold, that means that it's a high inventory level. So if you have high inventory level, net income, if you use absorption costing, the net income will be highest with a high inventory level. Is my internet being bad now? Let's see. No. Okay. Come on, man. We're gonna just get the quick and easy thing. So you add the per unit cost of direct labor, of variable costs, and of the fixed costs. You add all the costs, and then you add the units produced divided by the units sold. Oh wait, no. It says fixed manufacturing overhead. Oh wait, so you do direct materials, direct labor, and variable. You add those, and then you do the fixed one by doing 30,000 divided by the number of units. That's easy, and that's easy. Okay, so one, yeah, I know how to do that. For internal decision making, it's best to use. Variable costing. So what is the unit product cost of each frame? Oh. I forgot how to do it. I think the other one was using absorption costing, and this one's using variable costing. So this... Oh, you have got to be joking me. What? They don't give the explanation. They don't give the explanation. What? Are you kidding me? No. So what you do, this was part of our homework assignment, so yeah. So variable costing, you have the sales revenue minus variable costs. I think this is something I need to study. Like, I think I need to just make this, a screenshot. Oh, can I zoom out? Can I zoom out? View. Let me zoom out so I can. All right. Well. Stop. Stop. Come on. I already restarted my computer. Is it because I'm recording for such a long time? Is that the reason? Is that the reason? Is that the reason? Are you going to keep doing this? I don't have time for lag. I don't have time. It's because I didn't give myself enough time. So it's my fault. Good job. I bet it's going to be very pixely because it won't let me zoom in. What? It won't let me make this window bigger. Wait, what? What? No. I would just like to make it bigger so I can take a picture of it without it being pixelated. You have got to be joking me right now. It's not showing the picture when I search for it. It's actually not. I literally saved it as variable costing. I just did that. How is it not showing up? I just saved it. I just did that. Nope, that's not what I wanted. Why isn't it opening the image? Open the image. It's so pixely, yay. So sales revenue, and then you subtract variable costs to get the contribution costs, the contribution margin, and then you subtract the fixed manufacturing costs. The fixed manufacturing costs. And then you subtract the general and administrative expenses, and then that's the net operating income. Whereas with full absorption, you do sales revenue, and then you subtract the cost of goods sold, and then you have a gross margin. And then the gross margin minus selling expenses. What's a selling expense? What? And then you subtract general and administrative expenses, and you have net operating income. Ugh. Okay, so now I can answer the question, right? So since we're using... Oh, I have to go to the next question already. Select a variable costing income statement. I'm just going to do this. So the variable costing focuses on fixed and variable expenses, while absorption focuses on period and product costs. And the variable costing income statement calculates contribution margin, while absorption calculates gross margin. So full absorption can have different profit because of changes in inventory levels. I don't know. So actually it's also equal when there is no beginning and no ending inventory. And it's equal when they're equal. Now, how we will now calculate this using unit absorption, or no, we will use absorption costing. So first you calculate the sales revenue. Oh wait, never mind, I'm stupid. So what you do is you don't need variable stuff because it's an absorption cost. So you add direct materials, direct labor, and overhead. The total overhead. So you do 45 plus 37 plus 8 plus 58 divided by 1640, and it's 5140 divided by 41, and you get 125.37. No, you have got to be joking. How did I do this wrong? It's divided by 2,000. What? Oh my goodness graciousness. Now you will use variable costing. Oh. The variable cost is the unit sold times the variable cost per unit. So you just calculate the variable cost, that's it? So you add... Wait a minute. No. Yeah, but the general administrative expenses, though. Do you just... Is the unit product cost the variable cost plus the fixed manufacturing cost and the general administrative expenses? Come on, man. Oh my goodness. Hold on a second. So do I have to add this, this, and this? No, they have the cost of goods sold here. The unit product cost. But we don't calculate the unit product cost. We calculate the variable cost. We calculate the variable cost of goods of units sold. So I guess I'll just do that. But they already told us that, and we know they didn't. So the variable so the variable cost, they have the unit sold times the variable cost, which is 45 plus 5. So they have 45, which is total variable manufacturing costs, and 5 the... Wait, what? Wait, why would they do 45 plus 5? That doesn't make sense. That doesn't make sense. Yes. That doesn't make sense. Yes. Why would they do 45 plus 5? It doesn't make any sense whatsoever. So these are all variable? But why would you do 45 plus 5? This plus this plus this is equal to 45. 30, 40, 45. Yeah, what? 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 This makes no sense. Oh, I'm dumb. They did this number plus this number. Variable selling expenses. So they just did 22 plus 18 plus 7 plus 11, which is 58. No, you've got to be kidding me. Okay, they actually gave the reason this time. They didn't give the reason last time. The answer is 47. Selling and administrative costs are never considered part of the product cost. Oh, so you just don't use it, selling and administrative costs, and then you get the answer. Well, I don't know why they didn't explain it last time. I really needed them to explain it. Otherwise, I wasn't going to get it. Dude, contrast the weight fix. I was confused on this question before. I can't remember the answer to this question because I was really confused by this. So in absorption, you expense it as the units are sold. That's the thing I was confused about, I think. So in absorption, you expense the fixed manufacturing overhead as units are sold. And in variable, they are fixed in full each period. That's, yeah, I was confused about that for a few questions. Okay. $50 plus 75 plus 27 plus 30,000 divided by 10,000. No, it's divided by 6,000. Oh, you have got to be joking me. You have got. It's no. Oh my goodness. What? They said it's absorption costing, but they calculated the cost per unit and they used the number of units produced. What? What? Oh my goodness. $19 plus $40 plus $9. That was simple. Variable costing income statement. So for maybe that one question was incorrect. So for variable costing, we're going to just use the ones that were sold. Yep, that's what they did. So for variable costing, they only used the ones that were sold. And for absorption, they used all of them that were produced. So either the question was wrong or I'm stupid. And I forgot what the question was. When inventory increases, absorption costing net operating income is higher than variable costing net income due to the fixed manufacturing overhead. I don't know. So deferred fixed manufacturing overhead is deferred in the inventory account on the balance sheet. I don't even know what that means. This occurs when inventory decreases. So when you're calculating the fixed manufacturing costs, that's when you use the amount of units that you produced, not sold. I don't know. What is the unit product cost using absorption? Dang it. I wonder if the music's too loud. No. Plus 8 plus. So for variable. For the fixed manufacturing overhead, you do the amount produced. 119. Put her there. Nice. This is the same question. $70.75. What? How? What? 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 I'm an idiot. I'm an idiot. I'm an idiot. This is not for absorption costing. I'm stupid. I'm stupid. I'm stupid. So you'd only do it with the ones that were sold? Oh my god. For that specific type of question. Okay, so when inventory is high, absorption costing has high profit. When inventory is low, variable costing has high profit. And when inventory is low, variable has high profit and low cost of goods sold. What? What? No. It's just logic. I failed at logic. I didn't read the question close. Look. Okay, so total fixed expenses is equal to I bet it's wrong. It's right. Holy crap. I'm not sure. I don't know. I'm not even gonna guess. Full absorption costing. So a limitation of full absorption is that it encourages managers to overproduce sometimes. Okay, when the number of units produced exceeds equals the number of units sold. Nice. $79,398. Net operating income is less under absorption costing. Okay, so profit is greatest with high inventory level with absorption costing. So that means it's decrease. Okay, managers may have an incentive to overproduce using full absorption. What is the total variable cost? Times 780 plus. Oh wait, hold on. No, 140 plus 19 times 780 is 124.20. When inventory decreases. Maybe I'll go to chapter 1 next. Because like I didn't really study that chapter like at all. Nice voice. Okay, when. Okay. High inventory. Basically, I have this part memorized. High inventory is high profit under full absorption costing. So, high inventory is high profit under full absorption costing. Low inventory is low profit under absorption costing, which means a higher price of the cost of goods sold. There. Oh my god. Finally. Oh my gosh, that took forever. Okay, I think right now I'm just gonna. What I'm gonna do is just reset the internet, and I'm just gonna not record. Well, obviously, I'm not gonna record while I'm in a lecture, in my class. But I think during my class, I might try to do the SB for chapter 1, possibly. So maybe. Oh, maybe it'll be easy. Who knows? Of course. So anyways, and then maybe, yeah, obviously I'm going to be back later today.